All right, on happier times, call it the Trump effect. That's the subject of the riff. That's right, the Trump effect on the economy. Now, true enough, the ink is barely dry on the one big beautiful bill. And the impact of that in its entirety is really going to boost factory building and the blue collar boom next year. But some of the business tax cuts are retroactive to January 1st of this year. So American business already hard at work buying new equipment and machinery and various information software and so forth. Right now, they're paying for it with their 100% immediate cost write-off. That was in the bill. You can see this in the revised GDP report for the second quarter, which ended in June and came out this morning. Real GDP jumped, wait for this, 3.8%. That is a big number. It was the first real quarter responding to Donald Trump's optimistic and bullish psychology that America is back, the hottest country in the world. And speaking of optimistic and bullish psychology, get this, since early April, the S&P 500 stock index is up 32%, and the tech-heavy NASDAQ is up 46%. Investment money is pouring in all over the world. And domestic businesses are starting to take new risks to expand their operations. My hunch is a lot of entrepreneurs are out there starting new businesses, and in fact, new business formations since January are projected to rise 16%. That, according to the St. Louis Federal Reserve Bank. Now, as part of the Trumpian philosophy, get out there and build, especially factories. When you build new factories, you're talking construction, pipes, power, trucks, cars, jobs, wages, diners, restaurants, bodegas, office buildings, homes, and so on. And that means even more jobs. And that means even higher wages at lower taxes. Now, Joe Biden's last quarter was minus 0.6% GDP. Donald Trump's first quarter plus 3.8% GDP. Years ago, it's kind of like East Berlin and West Berlin, East Germany and West Germany, remember? Big government socialism failed. Free market capitalism succeeds. Now, inside Mr. Trump's 3.8% GDP, the biggest winner was business equipment spending, plus 8.5%. In fact, overall business investment was up 7.3%. Intellectual property products, plus 15%. Now, consumers are okay at 2.5%. But here's an interesting wrinkle on this story. Producers are producing more than consumers are consuming. That's right. The business side is growing faster than the consumer side. And right now, that's very healthy because one byproduct is lower inflation. Now, I don't know why so-called experts don't use the GDP deflator, which is in this report and covers the entire economy. But whatever, that measure of inflation was only 2.1% in the second quarter, right on top of the Fed's 2% target, and suggests Treasury man Scott Bessent right on target when he says the Fed should lower rates by as much as 150 basis points or 1.5%. So, as usual, Jay Powell's Fed is wrong on growth and inflation. Growth was higher, inflation was lower. But right now, the Trump effect on the economy and the stock market is the biggest story around town. And that is the riff.